And welcome back. It's Jason Walter here. Thank you so much for joining me in today's video. I appreciate you. In today's video, I'm going to touch on what's happening right now for the month of March, thanks to a new report from Realtor.com. If you guys follow the channel, you guys know that I post a weekly update based on data or weekly data from Realtor.com. Instead, in today's video, I'm going to touch on what's happening right now for the month of March as a whole regarding prices, home sales, housing inventory, and of course, much, much more. And with that said, I hope you guys appreciate these timely housing market updates. And if you guys are new here, of course, I invite you to subscribe to this channel so you guys can make a more informed decision about whether you should be buying or selling a house, or if you're just interested in the latest data here. So let's go ahead and dive right in. I have a lot to share. So according to Realtor.com's March housing data, the inventory of houses for sale, the number of houses for sale in the US, continued to grow higher than last year, but this pace of growth declined slightly. So in other words, we have more houses listed for sale right now compared to last year, but the growth rate is actually slowing down. Also, inventory remained constrained compared to pre-COVID levels. So what we're saying here is that we have far fewer houses for sale right now compared to 2017 through 2019. Realtor.com also touched on the fact that we still have a housing affordability issue, which is constraining home sales as well. It says, despite slowing listing price growth, in other words, the asking prices of houses compared to 1 year ago has been slowing down compared to, the summer months last year, for example. Despite slowing listing price growth and increased price reductions, high interest rates continue to create an affordability challenge for home buyers as fewer houses went under contract, a decrease in pending home sales compared to the previous year. So in regards to housing inventory, or the number of houses for sale, there was approximately 59.9% more houses for sale this March compared to March of 2022. And that increase of 59.9% equates to 211,000 more houses for sale compared to last year. Even though we have far more houses for sale right now compared to a year ago, though, the growth rate in inventory began to slow slightly in March as fewer potential sellers opted to list their houses for sale. So here's a chart showing housing inventory going back to 2017. So obviously this year is in pink right here. The green line's 2021, 2022 is the bottom here, which we had historically low inventory levels. Here's 2020, 2018, 2019 in red, and at the top here is 2017. So levels we have right now at approximately 562,000 houses for sale this March is a gain of 59.9% compared to 2022 at the bottom right here. So for example, last March, there's approximately 350,000 houses for sale. Now there's 563,000. So the current levels we have right now is above 2022 and of course above 2021 as well. I'm going to kind of ignore 2020 for now because back in March of 2020 was right at the onset of COVID here. So instead, let's focus on 2017, 19, as well as 18. Because in those years in March, we had around 1.1 million on average. Looks like 2017, there was nearly 1.2 million. Let's just say on average, there was about 1.1 million. This means there's approximately 50% fewer houses for sale right now compared to pre-COVID levels. One thing that's important to know here as well is that inventory levels have been decreasing through March this year. But look at March of 2017 through 2019. Inventory levels were actually increasing from February. And that increase of inventory is entirely normal as more people list their houses for sale. This year, we're seeing just the opposite though, a decrease in new listings, which is causing housing inventory as a whole to decrease. Let's also talk about the number of contracts being signed between buyers and sellers. It says here the number of houses under contract, pending listings, declined by 24.5% compared to a year ago. This is similar to February's 24.7% decrease compared to February of 2022, which could mean, keyword there, which could mean that the housing market is starting to stabilize at a relatively low level of existing home sale activity. They're absolutely right. We're at a very low level of sale activity as well. When I was analyzing the National Association of Realtors data based on their index of pending home sales, the current levels for February were not too much far off the all-time record lows that was set last November. And by the way, when I mean all-time record lows, that actually excludes April 2020, right at the onset of COVID, when we had COVID lockdowns across much of the United States. In regards to home sale activity is stabilizing, I think we need more data regarding this because we can't just say that, based on 2 months of data, our housing market's stabilizing, right? So I think we'll have to see what happens in April and May, especially, to get some indication about where our housing market is headed. But if I had to guess, I would say that we are going to remain at very low levels of home sales this year due to the fact that rates have increased so much compared to the past couple of years. Speaking about that, they actually touch on that right here. It says higher rates and home prices compared to March of last year increased the monthly cost of financing 80% of the typical home by roughly $611 more per month, or a gain of 39.3% compared to a year ago. Now, taking a step back here, they're absolutely right regarding an increase in rates. So for example, rates have increased approximately 1.79 percentage points. Right now, at the time of this video, which is the 31st of March, rates are at 6.57%. 1 year ago, it was 4.78%. That's a no-brainer, right? An increase in rates compared to 1 year ago. However, home prices increasing from March, I don't know where they're getting that from because when looking at data from Redfin, for example, the median sold price is down by 2% compared to March of last year. On top of that, when looking at data from the National Association of Realtors that was just posted just a few days ago here, home sold prices were down by 0.2% compared to February of 2022. However, having said that, I think we would all agree that housing affordability today is much worse than it was 12 months ago due to the giant increase in rates. Here's also a chart of pending sales going back to 2017. Right here is 2023 this year, down 24.5% compared to 2022 right here. So right now there's approximately 400,000 houses that are in contract as of the end of March. Back in 2022, there's approximately 525,000. Also, as you can see right here, the levels we have right now is well below 2021 as well. Back in 2021, there was around 575,000 houses under contract. Now again, there's just under 400,000. Also this March is actually below levels in 2020 as well. Now here's something that I'm scratching my head over because this is a discrepancy regarding the data I shared from the National Association of Realtors regarding their pending home sale index. Two things I want to touch on this because, well, let me first just share this with you guys. So here's 2017 through 2019 right here. As you can see, for March, the current levels this year is actually above or slightly above pre-COVID levels, right? Above 2017, 18, and 19, but below levels in 2020. In February, it was actually just the same. The levels we had were below 2020, but still higher compared to 2017 through 2019. Now, this is so much different compared to the data I shared in my analysis of the National Association of Realtors data, because I think there's kind of two things at play here. At first, let me just share what I shared in my video here, because I explained how the current index for February, which is an index which measures the number of contracts being signed between buyers and sellers, that was down 26% compared to February of 2020 when comparing February this year, and down 19% from February 2019, and down 22% from 2018. So the levels we have this February is below levels in 2018 through 2020. However, when looking at this right here, they're saying here that the current levels we have right now is actually slightly above 2018 and 19. And to be honest with you guys, I really don't know the reason why they have this discrepancy here. If I had to guess, the measure here is a little bit different here. When talking about the National Association of Realtors, it's based on their index of contracts being signed, not a total measure of the number of houses that are got under contract here. So for example, this February, their index was 83.2. It's an index based on contracts signed. Whereas this from Realtor.com is a measure of the total number of pending home sales. So think of it as like a bucket, right? So when an offer gets accepted, it gets added to this bucket right here. When the home closes escrow or the sale finalizes, or if the buyer backs out, that actually leaves or exits the bucket here. So Realtor.com is looking at the total number of contracts being signed, whereas the National Association of Realtors is reporting that as an index. If anyone knows more about that, then please leave me a comment below. I'm just left kind of scratching my head, but I want to provide this information to you guys because it is a discrepancy and I want to make sure I'm transparent with you guys. What I will say though is that it does appear that the number of contracts being signed is increasing, but not the same rates over the past couple of years. In other words, this is not a repeat of 2021 or 2022. All right, let's get back to Realtor.com's report here because they actually touch on new listings. So in March, the number of newly listed houses actually decreased 20.1% compared to March of 2022. That's a higher rate of decline than last month's 15.9% decrease. So February 2022 compared to February 2023, it decreased by 15.9%. Whereas this March, the number of new listings decreased by 20.1%. Additionally, the number of new listings is still down by 29.7% compared to pre-COVID levels back in 2017 to 2019. Here's a chart showing the number of new listings going back to 2017. Again, down by 20% from 2022. There's approximately 350,000 new listings this March, but more normal levels is in the range of 450 to 500,000. So in other words, we're missing approximately 100,000 to 150,000 new listings that should have hit the market this March, but in fact, they did not. Now check this out. Even though we have the fewest amount of new listings this March in at least the last 6 years for a March, inventory actually increased in 47 out of the 50 largest metros in the US compared to last year. The biggest increase was actually in Austin, Texas, a giant increase of 312% in the number of houses for sale compared to last March. Raleigh, North Carolina increased by 273%, and Nashville, Tennessee saw a gain of 253%. In fact, the only metros that Realtor.com tracks, which saw inventories decrease compared to a year ago, were Milwaukee, Wisconsin, a decrease of 17.2%, Hartford, Connecticut, down by 17%, and New York down by 0.9%. It says here though, however, despite high inventory growth from last year, most metros in the US still had a lower level of inventory or a lower number of houses for sale compared to pre-pandemic levels. In fact, only Austin, Texas, which saw a gain of only 2%, and Las Vegas, a gain of 1.4%, saw higher levels of inventory in March compared to the typical 2017 to 2019's levels. So my biggest aha moment here is that Austin, Texas saw a gain of inventory, a giant increase of 312% compared to 12 months ago. But despite this giant increase of inventory is only up by 2% compared to 2017 to 2019. Realtor.com also touched on how fast or how slow houses are selling in the US. It says here for March, the average days in the market was 54 days. So in other words, it's taking 18 days longer to sell a house compared to 1 year ago. This is one main reason why this is fueling the number of houses for sale or inventory growth. But when looking at this though, houses are still selling 15 days faster this March compared to the average March from 2017 to 2019. So even though houses are taking 18 days longer to sell, it's still 15 days faster compared to pre-COVID levels. I also want to share this chart with you guys as well because this is based on the median asking price in the US. Asking prices in which home sellers are asking for their houses, of course. Duh. I think there's this misnomer out there that home prices are going down still. But when looking at the median sold price as well as asking prices, prices have actually been increasing this year. And this is actually a perfect example here. Every single month this year, asking prices increasing. So overall, compared to March of 2020, we saw a gain of 6.3%. However, compared to the all-time record highs that was set back in June at 449,000, we're still down by 5.6%. Also, here's a look at the median sold price in the US this year according to Redfin. So home sold prices have been increasing ever since the middle of February this year, going from 344,000, now it's at 361,000. So even though prices are down by 2% on a year-over-year basis, they have been increasing by about 5% ever since mid-February this year. Going back to Realtor.com's report here, I found this to be very interesting as well because I always talk about how every housing market's different. So they actually broke down the nation in each of the major regions here. So in the Midwest, active listings, this is housing supply, increased by 24.3%, whereas the South saw a gain of 127% compared to March of 2022. The Northeast only saw a gain of 11.9% though. And the West increased by 58.2% in the number of houses for sale on a year-over-year basis here. New listings, look at this. New listings decreased by almost 33% in the West, but they decreased by only 9% in the South. Asking prices, the Midwest saw the biggest increase, a gain of 11.2%. That's actually followed closely by the Northeast, a gain of 10.7%, but the West only increased by 1.9%. Days in the market also increased greatly in the South, a gain of 20 days. Also for the West region, it's taking approximately 19 days longer to sell a house right now compared to March of 2022. Now here's something as well that I found to be really interesting as well. This is actually the only report that I share in which they actually provide a really good analysis regarding the trends we're seeing right now compared to pre-COVID levels. So look at active listings. This is housing supply, a giant decrease in the Northeast, down by 60.6%. So approximately 61% fewer houses for sale right now in the Northeast compared to 2017 to 2019. In contrast, in the West, we're only down by 32.3%. New listings were also down by double digits in each of these major regions as well. The biggest decrease was actually in the West. New listings down by 36.9% compared to pre-pandemic levels. Meanwhile, asking prices for each of these four major regions are up by more than 30% as well. Days in the market, so houses selling faster right now compared to pre-COVID levels back in the Midwest, the Northeast, and the South, whereas the West is taking 6 days longer to sell a house compared to pre-COVID levels. So my biggest takeaways from today's video, and I want to hear about your guys' biggest takeaways as well. My biggest takeaways is this right here. Active listing count, giant increase in the number of houses for sale, except for the Northeast. But despite this giant increase compared to 1 year ago, inventory levels are still well below pre-pandemic levels. So for example, in the South, even though inventory increased by 127.4% compared to March of 2022, despite that giant increase, they're still down by 38.8%. In addition, my other takeaway regarding this report here is this giant decrease in new listings as well. Every single region recorded decreases by at least 19% compared to pre-pandemic levels. But of course, I'd love to hear from you guys as well. What's your biggest takeaways from today's video? And of course, if you guys got any value as video whatsoever, then please hit the like button. I greatly appreciate that. Of course, I appreciate you. Hope you guys have an awesome day. I look forward to seeing you on the next video.